What's up, everybody? This is Jimmy with Trading Decoded, and tonight I am going to make a video that's going to bring us all the way back to the basics. I am realizing at this point that I think some people are struggling to understand where, why, and how I come up with the levels that I see as I'm trading. And I want to make this video to help some of those folks understand, and that's the whole purpose of what we're going to be doing here. So first I'm going to list some things, and then I will explain what they are, and then we're going to open up a chart and go over them. I'm going to read these definitions off relatively quickly, and you can go back and replay this if you need to, but when we get the chart open and I start showing you what these things are, hopefully it clicks, and then you can start using this information to chart out your own lines and come up with better entries and exits for your trades. So the first thing I'm going to talk about, as silly as it sounds, is support and resistance. 90% of the trades I take are based on support and resistance. You do not need indicators to find support and resistance, and they are relatively easy to spot if you know what you're looking for. So what is support? Support is the level at which demand is strong enough to stop the stock from falling any further. The rationale is that the price drops and approaches support, buyers become more inclined to buy, and sellers become less willing to sell. So basically, if a stock is dropping and it bounces off a specific point, and then a little bit later in the day, we come back to that same area, it bounces off that same point again, you get the idea. That would be known as support. Resistance. Resistance is the level at which supply is strong enough to stop the stock from moving higher. The rationale is that the price rises and approaches resistance, sellers become more inclined to sell, and buyers become less willing to buy. It's the exact opposite of support. If we are moving up and the stock keeps bouncing down from a specific level, that would be your resistance. I know it sounds basic, but it is tremendously important that you understand what these things are. The next thing I want to talk about is trends and channels. Also very easy to spot on a chart if you know what you're looking for. These are also something else I employ when I am making trades. A trend is when a price is moving in an overall direction, such as up or down. Pretty simple. A channel is a chart pattern highlighted by two parallel lines bordering resistance and support within which a security trades during a period. So basically, you'll have a support, you'll have a resistance, and you'll have the stock bouncing back and forth in between those zones. That's a channel. That's pretty much all I use and what I'm looking for when I take a trade on SPY. That's it. I also use a couple of indicators because they are helpful. The ones that I'm using. I use Fibonacci pivot points, and I've just recently added VWAP to my chart as well. Pivot points are important because they're based off of information from the previous trading session. We trade on a daily time frame, so we're looking at a minute chart. And so our pivot points are based on the previous trading day. What's a pivot point? A pivot point is a technical analysis indicator or calculations used to determine the overall trend of a market over different time frames. The pivot point itself is simply the average of the intraday high and low and the closing price from the previous trading day. On the subsequent day, trading above the pivot point is thought to indicate ongoing bullish sentiment, while trading below the pivot point indicates bearish sentiment. The pivot point is the basis for the indicator. but it also includes other support and resistance levels that are projected based on the pivot point calculation. All of these levels help traders see where the price could experience support and resistance. Similarly, if the price moves through these levels, it lets the trader know the price is trending in that direction. Again, because it's using information from the previous trading session, it charts out these lines that tells you where significant activity took place before. Fibonacci pivot points are just like standard pivot points, but they also start with a base pivot point. The main difference is that they also incorporate Fibonacci levels in their calculations. Most traders use 38.2%, 61.8%, and 100% retracements in their calculations, and therefore Fibonacci pivot points represent 3 support and 3 resistance levels. The main logic behind Fibonacci pivot points is that many traders love using Fibonacci ratios. Both pivot points and Fibonacci ratios are used to find support and resistance levels. With so many traders using both tools in their analysis, they can easily become self-fulfilling. So we're still using a pivot point, but we're adding 3 levels of support and 3 levels of resistance onto our chart based on those Fibonacci retracements. Finally, we move to VWAP. VWAP is the abbreviation for Volume Weighted Average Price, which is a technical analysis tool that shows the ratio of an asset's price to its total trade volume. It provides traders and investors with a measure of the average price at which a stock is traded over a given period of time. Basically, it's what the average price of the stock is trading for at a certain time. Good information to know, because you know if you're getting it cheap or you know if you're overpaying for it, is the short version of it. So now we're going to open up a chart and we are going to look at today's trading session. And as you can see here, I have nothing on the chart. I don't have my pivot points on. I don't have any lines drawn. So what I'm going to do is first put lines, support and resistance lines, and explain where we got them. Actually, you know what? I'm going to turn them all on. Okay. So I made them all yellow, whether it's support or resistance. It's also important to know that oftentimes what is support now could become resistance in the future. So this particular day, we bottomed out from the drop at open and we started bouncing off this zone right here. Even after we did it 4 or 5 times and moved up, we came right back down and bounced off of it 2 more times. This is a pretty solid support. Okay, after all of this happened, and I did make this play on my account today, and we ran up, failed to break above this lower high, and came back down, I bought calls right here. And I did so because I had a pretty solid feeling that we would bounce right off of that support again, because we had already done it 1, 2, 3, 4, 5, 6, 7, 8, 9. That was the 9th time. That is a solid support level. We move up in the day. We don't get this one, no. We don't get to know this one yet. But we run up here. We bounce once. And again, we don't know this is solid support yet because the rest of the chart wasn't there yet. But after you get through this break, come back up, it acts as resistance, it acts as support, it acts as resistance, and then support, support. And as the day goes on, support, support, resistance, support, 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 support. So knowing this information is good, because if you decided to play it off of it to the upside, there were opportunities to scalp some moves. But you also know that if you break below it, that it was a pretty solid move, and you can probably take puts on that. And of course, that was a nasty drop right there. But let's go back. We're not talking about trades. We're talking about charting the basics. We bounced off this level several times in a short period of time. As you can see, it was support, it was resistance, it was support, 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 and so on. A little bit later, again, it was resistance, 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 support, 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 support. Okay. That is support and resistance. You have to understand how to come up with these lines. It is not hard. If you just drag your mouse over and your crosshairs will just go across the zone where, I mean, there's another level right there. This was also a resistance. It's not sticking like glue, but obviously the price was trading within that range and having a hard time each time we got to this zone of moving higher. All right, I'm going to turn off support and resistance lines. Next, we're going to move on to trends. Now, trends are an overall direction that an indice or a stock or whatever you're trading is moving in. Typically, we would measure trends from the tops or bottoms of candlesticks, like we did here. We took the tops, and ran it all the way down. How do you play this when trading? Well, if you get in and you're trending down, you could play puts until you break out of the trend. That would be your exit point. Okay? And again, they're going to be all over the place. They can be long-term trends. They can be short-term trends. Short, medium, long. But they're everywhere. And when you trade them and you break out of them, that's when your exit is. Okay? So again, we're using the tops on a downtrend and we're using the bottoms on an uptrend. Bottoms of the candles. On the downtrend, we're using the tops. On the uptrend, we're using the bottoms. On a downtrend, we're using the bottoms. But nonetheless, trending, it's making lower lows. Some people don't need to draw lines to see that, but they're important to know how to pick out. All right. Another play that was there today, although it was only one of them, one decent one, but oftentimes you'll find channels. Channel is when you have a support and resistance and the stock will move in between them. You can consider it a channel after you touch, I would say, one of the two zones twice. At that point, I tend to believe that that pattern is going to continue, of course, until it doesn't. And how I play these is when we come off a support a second time, I will buy calls and wait for it to get up to the top where resistance was or close to it, take my profit. You can buy a put up there, let it come back down here, take profit, and continue the pattern. You won't find channels every day. They are great to play when you do find them, but some of everything that we talked about just now happens all the time, every day in SPY, whether it's support levels, resistance levels, channels, or trends. You will always find one or several of those on any given trading day. Now, to the indicators. So here's VWAP. And here's those pivot points. Now with the pivot points, because these are Fibonacci and they do tend to act like support and resistance levels as well as magnets for price. That's why I use them. As you can see, we opened right at S1. The main pivot point is P. This is the high of the previous day, the low of the previous day, and the close of the previous day divided by 3. That gives you the main pivot point. And then each level below, the 3 below are your support Fibonacci retracements. And then the 3 above that are your resistance Fibonacci retracements. It is said that if you open below P, it's considered a weak market. And thus, normally, or it wants to tend to stay below that zone, but understanding that nothing is guaranteed. You always have to be on the lookout for something to change. And that's when we wait. After a channel breaks, after a support or resistance breaks, after a trend changes, it's imperative that you wait for another trend, channel, support, or resistance level to present itself before you make another play. We do not have to take trades every minute of every day. You will not be a profitable trader if you do that. What you need to do is pay attention to what the chart is showing you and be smart about what you're seeing. For example, if you're trending down, you shouldn't be thinking, when should I be getting into calls? No, you should be thinking, at what point would it be a good entry to take a put and continue, assume that the trend down is going to continue until you start crossing major points as part of a reversal. We're not going to get into that right now because we're talking about basics here. But back to the Fibonacci retracements. We opened at S1. We came down to S2, which acted just like a resistance line right there. So even though I drew these lines, they're very close to some of these Fibonacci points. So you got your resistance. We migrated up here, chopped around on this S1 pivot point, get above it. We test the pivot point again, stay above it. We happen to break through, but as you can see, we stuck around that zone several times in the day. Once we got below it, it began to act as resistance. And then we headed back down to the next pivot point lower. Acted as resistance for a while. And then where do we go? Right to the next pivot point to close out the day. These lines are a great indication of where price may travel. Okay. And when it gets there, I use them if I'm in a position as an area to possibly look to take profits. Why do I take profits instead of hold through there? Because if I were in puts and we get down here and we chop around, I have no interest in waiting to see where this is going to go. In this case, it bounced off of here. So I would have left money on the table had I bought puts here and didn't close them until I found out which way we were going to go. I sell into the momentum, coming into a zone where something could change the trajectory of which I got into my play. So in this, I was in a downtrend here, so I bought puts. And as soon as we started to chop even a little bit, even if this pivot point wasn't here, the minute we weren't moving lower after a couple of candles, I'm selling my position. But when you have these pivot points, you can use them for the same reason. It happened right here. Let's say you happen to buy calls down here because we realized we couldn't move lower. As we approached this pivot point, we didn't make it to it, But we certainly got close enough to where if you were selling into the momentum of making it up there, you would have got out of your call with some profit and it turned back around. Same thing here. We know that it ended up breaking past this, but again, we got right up to this pivot point again, and then we chopped on it for a few minutes. You have to be smart. You have to not say, I'm going to hold and hope that it moves up and continues up from here, because oftentimes it won't. And when it reverses on you, then you're chasing the close. And when you chase the close, you're leaving money on the table every time, because you're never going to get filled when the price is running away from you in a way that's going to benefit you better. Whereas if you're selling into the momentum of the move, you can get top dollar. Just don't wait for it to get up there and turn around. If you were in calls here and it turned around like this, you probably couldn't have gotten out unless you market ordered, which would have cost you money also. On this downfall, you wouldn't have gotten out anywhere near here up top. If you use limit orders like I do, you would have been stuck probably the second or third candle down because you'd be chasing the price to close. That's why you sell into momentum. Don't wait for the reversal, because it'll catch you and it'll hurt and you'll leave money on the table. You'll be doing exactly what you were trying to avoid by trying to catch the entire move. So again, VWAP is here also. And as you can see, it too acts somewhat as a magnet for price. And that's because when we're below VWAP, people consider the stock to be a good deal to buy. And when they buy it, it moves the price up. We move up above it, and then people start to take profits and brings us back down to it. And we move up from it, and people take profits. We get below it, people start buying, brings us back up to that average. And there we go. So as you can see, I have no other indicators on my screen. Nothing more than support, resistance, VWAP, and my pivot points. And on my baby account, which you guys are going to see a video on at the end of the week, which I think at the time we were at $1,100 or so, something like that. I made $162 today, making easy, out of the money calls and puts. No emotion at all, no stress. It was a nice, easy day, even though this market was kind of rough. But if you follow the rules and be patient, you can easily find opportunities every single day to make money. Again, I made this video today because I feel like some people are just not grasping the basics. And if you don't know the basics, then trading in general is going to be infinitely harder for you, let alone when you start to incorporate the usage of options. If you know how to use the basic information, then you can magnify your winnings by using options. Guys got to be smart, got to take profits, and you just got to be picky and patient, and it will then start to fall into place for you. So I hope this video was helpful to some people. If you guys want me to make a specific video about anything in particular, please leave me a comment. If you're in our Discord, please recommend me something to do for you guys. I want people to understand what they're doing and why they're doing it. And I want people to be able to make money in this stock market. I really do. So please subscribe to the channel, if you're not already. Throw me a like, leave me a comment if you have questions. I'm going to go ahead and leave a link to our Discord in the description area, as well as a link to our Patreon so you can support the community and be a part of it if you'd like. And if you're interested in using TradingView, I also have a referral link down there that if you sign up and end up getting a paid plan from them, we can both get $30 off. But that's about it. So I'm going to go ahead and leave it there, and I hope you all have a good night, and I'll see you in the next one. See ya!